Hey everyone, welcome back to another episode of Real Estate Shorts. I'm Alex Morkate, and in today's episode we're going to talk about the triple net lease in commercial real estate. We're going to define what that lease really means. We're going to define the three nets, so the three ends that make this lease type exactly what it is. And I think from extension, we're going to define what reimbursable or pass-through expenses are, how they're used, and some of the mechanics around a triple net lease. Let's get started. So what is a triple net lease in commercial real estate? So a triple net lease is one of the most popular lease types in that it shifts responsibility of either the payment or the reimbursement of a certain expense onto the tenant. So as an example, let's say I am the owner of a building and you are a tenant. If I'm the owner of the building, I'm going to incur property tax, insurance, utility expenses, repair and maintenance expenses. And I think as I incur these expenses under the triple net lease, I can pass these expenses on to you. So I will likely pay the bill, but then I will then turn around and look to you and say, here's proof of the bill, please reimburse me, please repay me. So that's one choice. The next choice is the owner could simply have the tenant be billed directly. So I could look to you and say, I don't want to collect a bill ever. I'm going to ask that you put the utilities in your name. You get charged. You put repair and maintenance on your service contract. You get charged. And sometimes, even depending on the lease type, property type, and tenancy, it could also be as far as you are going to collect the property tax bill yourself, and you just need to show me proof of payment. So we'll go down that hole a little bit more later, but for now, the pure definition of a triple net lease is the tenant is responsible for paying their share of the operating expenses on a property. And so just to elaborate on that definition a bit more, I think there's two key components that you should keep in mind. The first is the definition of proportionate share. So if I occupy 5,000 square feet in a 10,000 square foot building, I should only pay half of the expenses. So that's one point. The second point is operating expenses. So the triple net lease limits the responsibility of that tenant to operating expenses, real estate taxes, insurance, and so on. So again, we'll define those three ends in a moment, but the tenant is not responsible for capital expenses. So for example, if the roof caves in, who's responsible? Under a triple net lease, owner would be, not tenant. There are certain circumstances where the tenant would be, but that's a different lease type. We'll get there in another episode. So the quick definition of the three nets or the three N categories within a triple net lease is real estate taxes, insurance, and this catch-all category called common area maintenance. So I think real estate taxes are straightforward. You'll have property taxes, personal property taxes, sometimes state taxes. Each geography is a little different. Insurance, same thing. You can have a general liability or casualty insurance policy, but then again, depending on geography, you can have flood, you can have fire, you can have another natural disaster insurance policy, or really any other policy to protect against the unknown. The last category, however, is the one that oftentimes gets found with the biggest amount of debate, and that's CAM, Common Area Maintenance. So this is this umbrella definition for basically all the other expenses. So repairs and maintenance, janitorial, landscaping, security, you name it. So all these other categories, I itemized a few here on the screen, get rolled up into this CAM, or Common Area Maintenance category. To be clear, CAM is not limited only to maintenance and repair items. It is a catch-all category for all the remaining items. So there, it's possible for you to find some exclusions. So you may come across a, quote, triple net lease that says property management is not included in CAM, or certain personnel or third-party professional expenses are not included in CAM. So just keeping that general rule in mind that everything is up for negotiation in real estate, including the definition of CAM and what should be repaid by the tenant. So in this example, I included property management on that list, but just keep in mind, it may not be in your lease or those that you're structuring. But these are the main three categories for what define the triple net lease. So by extension, if you were to say a double net lease, it could only be two of these. So this begs the question, if the triple net lease shifts responsibility onto the tenant to pay for expenses, how does that process really work? And this is where that definition or phrase of reimbursable income, reimbursable expenses, pass-through revenue come into play. So it can come in a couple different phrases, but they all refer to more or less the same process. I think it's easiest to illustrate it, but I'll give you the short version now. Reimbursable income or pass-through expenses, this is that stream of cash flow paid by the tenant to the owner to reimburse them or repay them for a given expense. Again, keep in mind that the triple net lease shifts responsibility of payment from the owner to the tenant. And so they'll either pay direct, the tenant will either pay direct, or they will reimburse the owner for the expense. So in this example, I'm illustrating the latter. So we have a 10,000 square foot building, and this tenant occupies 100% of that building. Operating expenses are budgeted to be $100,000 a year. Base rent, so the amount of rental revenue that we can come to expect to collect from the tenant, is $25 per square foot per year. And there's a 5% vacancy allowance. So now let's build out our quick snapshot to illustrate what this could look like. So we expect to collect $250,000 in base rent, 10,000 square feet times $25. And we expect to collect $100,000 worth of reimbursable revenue. So the owner and the tenant will define, this is the budget for operating expenses over the next 12 months. I believe it to be $100,000, and we both agree. Then we say, what is your proportionate share? So the tenant occupies 100% of the building, 10,000 square feet of a 10,000 square foot total building. So in this case, we'll say tenant is responsible for paying 100% of the operating expenses. So 100% times $100,000 gives us this $100,000 worth of additional revenue that we should expect to collect from the tenant. The total is $350,000. We'll take out a vacancy allowance. Maybe someone pays late, maybe one tenant vacates and another one comes in immediately thereafter. But either way, we're going to assume some kind of vacancy allowance. So we're left with $332,000. Keep in mind, the owner still bears the ultimate responsibility of paying all these operating expenses. It's their property. So they'll still have to pay taxes, they'll still have to pay insurance, they'll still have to pay utilities and maintenance and so on. So even though you're collecting it here, you still have to pay it here. And I think this is what we can do to begin to segue into the actual mechanics of a reimbursable expense. So from here, I think we just simply need to recognize that the owner is going to pay the expense, and then the tenant is going to reimburse them for that expense, leaving a net operating income of $232,000. So a few things to keep in mind. The first is, if you have 0% vacancy, then your base rent is effectively equal to your net operating income. So you'll notice these two numbers are the same when vacancy is 0. Why? Because the owner will pay $100,000 and then the tenant will repay them $100,000. Those two numbers wash each other out. And so base rental revenue equals NOI. But that's not always the case. You'll notice that the second we begin to introduce any amount of vacancy allowance, NOI does not exactly equal base rental revenue. So again, these two numbers are different. Now, I think another important consideration is what happens if the tenant doesn't occupy 100% of the space. Same issue. Some tenants may have a triple net lease. Some tenants may have another kind of lease within the same property. So you can't budget collection of 100% of those operating expenses. So does the tenant pay direct or does the tenant reimburse? And this really becomes this debate around management, about accounting, about preference at the owner's level. So as an example, it's really easy for you to push the bill on utilities onto the tenant. So ask the tenant to put the utilities in their own name, and then they simply pay direct, so that if they don't pay, they're dealing directly with the utility company instead of with the owner. I think, on the other hand, property taxes could be a reimbursed item. So the owner is going to collect the bill because it's the owner of the property that gets taxed. And then they shift the bill or move the bill or ask for a refund on the bill to the tenant. Reconciliation, CAM reconciliation, CAM rec, is another phrase that typically gets grouped together in this category. And so, for example, if we budget $100,000, but what happens if actual expenses are 95? The tenant may have been reimbursing according to the 100,000, so we may owe them some money after the fact, or vice versa. So just as a quick recap, the triple net lease is this lease category or lease type that shifts responsibility of payment or repayment from the owner to the tenant. So tenant is now responsible for reimbursing the landlord all of the operating expenses associated with that property. We spoke a bit about what defines those three N's, the three nets. So property taxes, insurance, and CAM. We spoke a little bit about proportionate share, CAM reconciliations, and what impact this has on NOI as we begin to introduce different tenants, different lease types, or vacancy allowance. So if you found this video helpful, I'd encourage you to take a look at a handful of others. And as always, if you have any questions, comments, or feedback, I look forward to hearing from you. Thanks again.